So you're seeing my cursor.
Mm,
So
yeah, I can see it.
I chose to use this one, which is very obvious. Well, which is very obvious that it's a head, and I'm having shoulders here.
Hmm. But I
So
would need to, most of the times, I would need to look at what actually the candlesticks give you, because sometimes the line chart may give you something different. But
okay,
first mark it, then we can, and we will see it. Then you can go back to candlesticks.
okay. Let me make it very clear so I know what I'm doing. Yeah. So I looked at this and I realized that the price was moving upward,
Mm,
which then caused me to decide that this is a bullish
mm,
head and shoulder
mm,
because price is moving upward.
mm,
So I marked the first support
mm,
at that level, and I marked the resistance up here.
mm. But there is no resistance there. That was just a high.
Oh, I thought since it didn't manage to go, oops, it didn't manage to go beyond, it was resisted. The price was rejected at that point,
Where you see,
doesn't it?
no,
Mhm.
the resistance you determine it from the previous data, not the upfront. So right here, there's no other point that is touching that level. So meaning it's not a resistance.
Ah,
It
so
cannot.
resistance is.
It can only
Mm,
be a resistance or a support level when 2 points have touched that same level.
oh,
Two
historically.
points or more, yes.
So this doesn't qualify, basically.
That doesn't qualify to be a support. It's just a point of interest, I mean a resistance. It's just a point of interest where we
Mm,
have our high and the breaker broke. So this can only mean it's a breaker broke. But I would want you to go to candlesticks.
okay.
So the candlestick is there.
Mm,
So you can see there is no, that point was never a what? A resistance. I mean, yes, a resistance level. It's just a support. If you are to determine resistance of that level, why it reacted from that level, you need to go on the left. So you go to the left, we see what actually caused that. So looking from the left, what caused that? This is what? This is HM24. So probably you would go to use the wicks. Use the wicks.
I use the wicks.
Wicks, yes, wicks of those candles. Okay, there like that. There is enough. Now you can now drop to H4, then you will see why it reacted from that level.
Oh, so that's where now the time frames come in handy.
Yes, yes, you can now go zoom in and look for where that level is. Are you using a mouse?
Yes, I am.
Yeah, you scroll to the left, scroll to the left, and we look for where. Continue, continue. This is we haven't really reached it. Continue. It's still very far.
Wow.
Now you zoom in a bit. Zoom in. I mean zoom out a bit. Use your cursor and you just scroll in and scroll out.
Oops.
Use your cursor, the ball on your cursor to scroll in and out.
My
In
cursor
and out.
is just here. I don't know any other way of doing it
The
because
cursor has the ball like that. Um, Now go. This is the hour high. So you scroll to the left. We see where H4, where this level views. No, you scroll. You scroll now. Don't zoom. You can see that was a fair value gap. Are you seeing that?
yes.
That's where it reacted from. That is a fair value gap where that high, the previous high where you're calling a resistance, that's why
Mm,
it reacted from there. It was a fair value gap, so it had to come and mitigate and take the liquidity there, so you can go back to where we were there. So you can see this was your point there. Are you understanding?
mm.
This was your point there.
So now let me understand this better even. Now this fair value gap, the reaction initially here, it was bullish, isn't it?
Where?
That it was bearish.
It was bearish. So it
Then
means there was an imbalance in the market, like what I told you. There was an imbalance in the market. For it to give us a fair value gap, it means market price has not touched this market. It's not tapped by any buyers. So there is an imbalance. So it means at any time, at any point in time, market will have to come back and balance and touch that level to balance the market. That's why you see it took it all this time to come and later balance it and then later again go down to sales. Are you
oh,
understanding
so,
that?
so this one was balancing this one.
Yes, exactly. So
So it couldn't go beyond that.
where you see a fair value gap, you know that at any time, at any point in time, uh, market will come to balance that fair value gap.
And when it balances, that it continues the trend.
It when after balancing it, it goes down or it goes up, it depending on the previous trend.
Okay, okay. On this trend here.
The trend where that fair value gap was made from. So
This
if
was
that fair value gap was made in a sell,
mm,
so market will come and touch it. Once it
and sell.
touches it, then it will sell
Oh, before it continues.
before it continues to what? To buy.
Oh,
Are you
okay.
understanding? So if it
I
was
got.
made in the buy, if the
Mm,
fair value gap was made in the buy, the fair
mm.
value gap will be touched and then like here. Are you seeing on that level where you are currently?
At this point here.
Yes, that was a fair value gap there. Market
Mm,
came, touched it, went to buy, then later on continued to selling. It when it
okay.
came here to balance the market, then
Mm.
bought for some hours, actually for like a day. Then later it went into sales because we are in H4. Are you understanding that?
Yes.
Yeah.
Okay. So now, so this that is not a
It's
good
not
example.
support if you're on H4.
Mm,
Even right here, you may not say it is a support. You may say the fair value gap here is the one which is a support. You understand? All the way from the other side is the one which is being reacted to several times.
mm.
Yeah.
But a support would suggest at this point,
A
the
resistance.
because this is resistance.
Yeah,
At this,
this when this price came to it and went down, that
mm,
fair value gap became a resistance.
okay,
You understand?
okay. Yes, I
So
do.
when it was broken out here
Mm,
from this level, when it was broken out, then
mm,
it became a support on H4. When a resistance is broken out of and is
mm,
continuing to rise, it
mm.
ceases from being a resistance to becoming a support level.
Okay. At this point now, at this point.
Yeah, at that point now it becomes a support level, and it came
Yes.
retested from the support level. Later it broke it. So once it broke it, now you no longer want to use it, but if you want, you can still use it because it again reacted to it as a resistance, gave you some 8 hours of pullback, then later on broke it again to go into buys. That's how you just continue to, to uh, analyze and read the chart.
Mm,
Are you seeing that that point, that fair value gap, has been touched even on this very last move where we are? The last one, the last move. It
this
gave
one.
two candles. Yes, it gave you two candles of retest there, the red candles there, those ones. Exactly that. So, meaning it was a very important point for us to actually utilize.
So this would be a point of interest
Exactly.
really throughout the market.
Yeah.
Each time the price comes here, something will happen.
Yeah. But
Mm,
sometimes you may want to look for others. You may not follow it all through. It will later hinder you to read some other things. So you may just use it once or twice and then delete it or leave it out and draw some other points of interest. Of
mm,
course, you'll be seeing them. Of course, market will always show you that this is a point of interest.
mm.
Yeah.
Okay. Let me therefore go back. Can I go back to line chart and I look for an obvious pencil
Mm,
chart?
what I do, I'm going to let you do more in your time because I
Okay.
see time we've gone
Yes.
to 4. So let's
Mm,
now get into the today's lesson
okay.
of rising wedge and falling wedge. Then
Mm,
we'll do what? You'll be sending them later on to my inbox.
okay.
So you can stop sharing. Click where
Okay.
you had present, then you click on stop sharing, or you can even see it on top. You can see it on top where you have a word stop sharing. All right.
Yeah.
So today we are going to look at rising wedge, and falling wedge.
Are you writing in the notes in the what do you call it? Uh,
You're talking to me?
yeah, yeah, of course. I
Yeah.
was asking. I'm hearing you writing, and I'm not seeing what you're writing.
No, no, no. I'm just going through my notes to pick up
Mhm.
something I need to show you.
Okay.
Um, so this is what this is where we are going to focus on rising wage and falling wage.
Okay.
Yeah, and so we'll be looking at that. In your own understanding, what is a wage? Just if you hear something to do with a wage.
The
So
wage,
yeah,
the wage is like something which sows through something, comes from men.
a wage. Okay. Yeah, we call it. You may even say it's lost in the form of a ladder, probably. So I don't know, but yeah. Let's look at the normal, what what is it called?
The layman's language.
Layman's language. They say a wedge is simply a triangle tool in form often made of metal, wood, stone, plastic. Six it's used to separate two objects. Okay, so they are using. We're talking of like these guys are talking of a wedge like those ones we use. when we are splitting wood and what have you.
Mm.
So, but here the wedge we're talking about is different. So let's um, let's look at our wedge in trading. So this is what we'll be looking at. That is our wedge there. We'll be looking at this kind of wedge in the charts. This is a rising wedge.
Mm.
Call it the bearish rising wedge and the bullish the falling wedge. Meaning whenever you see it, it means we are going bullish. Whenever we see this kind of form, we know that at a certain point we'll be breaking out of the consolidation to bearish or to selling. All right, so let's now present something else and look at it in detail. All right, so looking at the charts, I hope you can see my charts.
Yes, I do.
So looking at the charts, before we can look at the charts, let me explain it a bit. So we have two types. We have the bearish or we have the falling. I don't normally use the word falling. I mean bearish and bullish. I normally love using falling and rising. So price, okay, falling wedge. Now I want you to have this at the back of your mind from this very lesson so that whenever you're analyzing you are not confused with
Mm.
trend lines. Now a wedge, for anything to be a wedge, it has to be inclined, it has to be on an angle, it has to
Mm.
be on an angle. This is a wedge, that is a rising wedge. Hmm?
Mm.
Now this is a rising wedge. Now there is also something like this. Now, this is
Mm.
not a rising wedge. This is an ascending triangle.
Oh.
I want you to mark the difference. The difference between a rising wedge and an ascending triangle. We are going to talk about an ascending triangle. We are going to talk about the ascending triangles later. Triangles where we will see ascending and descending and
Mm.
symmetrical. So the reason why I'm bringing it now, I want you uh, uh, to be knowing from the start the difference so that you don't confuse them at any
Mm.
point in time. So that is a triangle, an ascending triangle. This is a rising wedge. Now, this is a channel. This is a
Mhm.
channel.
Mm.
I don't know if you're understanding me. Now, a channel and ascending triangle, all these are what? Continuation patterns. Whereas
Mm.
this is a reversal pattern,
No, which one? The
the rising wedge is a reversal pattern. Whereas ascending triangle and the channel here is these two, they are continuation patterns. So you
okay.
need to know them. What makes this to be a channel? The distance between these two trend lines is parallel, meaning it is the same.
Mm.
Are you understanding? That is the difference between a channel and a rising wedge. The distance between the price movement is the same.
Mm.
This distance here. So price is coming from here. It's doing this. It's doing that. You understand?
Yes, I
It's
do.
doing that. Then eventually it breaks out and continues.
Mm.
Are you understanding? So
Yes,
this
I.
is a wedge. I mean, this is a channel. Whereas on this other hand, price will only do this to come, do that, do that, do that, do that, do that. Then it will break out into reversal.
Mm,
I want you to understand them, please, because if you get them from this very point, then the better. Then for a
mm,
triangle price will come in like this, come in like this, like that, like that, like that, like that, like that, like that. It will continue.
mm.
It will break going up.
Okay.
Are you understanding? So these two are continuation patterns. Now, when you get them, you'll be the happiest.
Okay.
All right. So, like I said, this is the rising wedge, rising wedge, or call it bearish. Then we have the ascending triangle here, ascending triangle. Then we have the descending. We have the channel here. This is the channel. Now, that is a bullish channel. We may call it a bullish channel, but me, I normally leave alone those names, bullish, what have you, because it's continuing with the bullish. It's a continuation for the bullish trend.
Mm,
All right. So this is a channel. Now that you've known that, as usual, price for a rising wedge, price comes from sales. Now keeps on making higher highs and higher lows, higher highs and higher lows, like that, like that. Then later on, it fails to break through from. It keeps on contracting. Starts when it is big, but keeps on contracting within the consolidation range there. Then later on, it actually the sellers get momentum enough and break through. They break through. Most of the times, entry you always want to first get a retest, then you make your entry as usual.
mm,
You know. So this is what you wait. A retest there. Then if the retest goes back inside the trend line or that channel, the rising wedge, then it's a fake breakout. You don't have to enter because until it retests and comes and then starts to sell again, you have no entry. You have
mm,
no entry. So um, sometimes it gives you a fake breakout to only go back in and continue consolidating. So you
mm.
need to know how and when to make your entries. All right. Any questions on rising wedge?
Uh, I would now I understand the principle, but I would want to see it when it is
Yeah, of
happening.
course, we are going to check in the market right now. But I wanted to
Okay.
know if you're now conversant and you're good here.
Yeah.
All
My,
right.
my biggest take here is when it breaks out, I've got to wait for a test to be sure
Mm,
that it's going to continue.
all right.
Lest I get trapped into the fake one. Mm.
All right. So we are looking for a rising wedge. Rising wedge. The reason why I've used those is this because of that candle there. The last candle. there. That's why I've not gone for the wick up there. So now you can see there I have the low, I have the high there, I have the low there. Then it later gave me another high here and later broke out. This is not a perfect this is not a perfect rising wedge, but it is a rising wedge. In the end, you can see what I was talking about. We have the breakout here. Let me change the color. So we have the breakout here, then the retest, and you can see the
Mm,
retest candle never went into the what? The
mm,
trend line again. It closed
mm,
outside, and you can see the sale was on. It again retested on the previous order block, and look at that.
okay.
Are you seeing that?
Yes, I'm seeing
So
it.
you remember this is daily, so it means by the time this retested, you would have long time gone out because of this candle alone would be enough after the retest there. This candle
Mm,
alone, this was a whole day of selling. Then a pullback, a short pullback after the break of structure. If we are using price action, this was a break of structure there. So it returned to the breaker block, then later sold, and then later got another pullback to come back to this order block, to come back to that order block there. Then
mm,
immediately it sold when it reached there. Look at that. So now you know the break, the what, the rising wage, how it works. And look at that. If you were to enter probably again, look at that money. All this would have been your money, like a whole week of sales.
mm,
Whole week, okay, 4 days of sales,
mm,
not interrupted by nothing like an interruption. And if we
mm,
look on the left where it reacted from to change the trend to the buys, it was this order block. Are you looking at that? When it
yes.
reached that order block, then buyers came in and started to start buying, changed the trend to buy entry, into
Mm,
buy trend. All right, so that was a rising wedge.
mm,
Go for another example.
oh,
Okay, let's just go to H4. H4. H4 will get a lot. By the way, in H4, our rising wedge would have been somehow perfect. Let's look at that. Yeah, H4, it would have been like this in H4. In H4, it would
okay.
have been like that.
Mm,
Yeah,
oh,
on the red candles there. That's how the H4 would have been. So this
mm,
one or the daily one would have helped you to get a clear entry when you're doing H4. You can see the reason why I normally love higher time frame. After the retest, you can see on H4
mm,
as a retest, several retests gave us a double top, then a big engulfing sell, then returned back there, then another sell, then returned again the third time, then another sell that broke through actually that level, which had become a support level there. It broke
mm,
out of this level here, broke out of that level there. You can see it had become a support level.
mm,
When it broke it, that was a confirmation of the continuation of the sales. So what did we see? That was sort of a break of structure.
mm,
Market retested again to that breaker block, and then look at that beautiful trade on h4, this one here, this one here that goes to this level. It was a beautiful trade, uninterrupted, like 2 days of sales there.
Mm,
Is it 4 times how many candles? There are a lot of hours here of sales. You would have made the money, enough money uh, in the long run. So now let's get to see another asset. I mean another example. So on this level here, well, this is expanding. Maybe I should even talk about expanding now that we're talking of expanding. There's also what we call expanding rising wedge.
expanding rising wedge.
Yeah. So
Mm,
it's the idea is almost the same. It's coming from a point where it is sort of contracted, then it's now expanding as it is going up. But
mm,
either way, the idea still stays the same. The breakout happens down, even
mm,
even on the side of bullish. I mean, of bullish, still the same thing. The falling wedge is expanding, and then late from contraction to expanding, then later on breaks out going into buy trend. Are you understanding that?
yes, I am.
So there's another one. There's another rising wedge here. That one is a rising wedge there. That is a rising wedge. If we can take off that one and just leave it here, it's a rising wedge. And you can see this one retested after some good time. So this one you would not have gotten an entry. You would have gotten an entry when it came back to that level. Actually, it came back to that level. When it came back to that level there, so when you would have gotten the entry form, and it gave you actually a double top. Look at that. That's a double top, and you had your neckline here, and look at that breakout, retest, entry.
Mm,
Are you seeing that? The retest
yes,
candle, you've seen it.
yes.
So this is a retest candle, so you would have entered probably on this candle here after the retest. You would have taken all this money home. You would have made probably your stop loss just above there, or on the neckline. Probably that would have been your money. And looking from the left where this point reacted from, you would actually find that it was an order block, and indeed it was an order block. Look at that. It was a fair value gap on H4.
Remind me when you say order block, that's different from you have used a few words there. There was order block. There was another block. You said.
Fair value gap. An order block is the last candle on a trend.
Mm,
So, for instance, this is a selling trend.
mm,
Now, an order block is this last candle on that selling trend.
okay. Oh,
Even this one is an order block. This candle here, that candle there in the middle, I call it an order block
why would you call that one another block?
because so it is my last sell candle here on this move. If I go to H1, you would see it that it was. Will it give it to me really? I doubt. I doubt it will. Yes, it is here. I think it is the one here. Think, let me see. Yes. Now, looking at that, you can see there's a lot of pullback. So if again, if I was to use an order block on H4, I mean on H1, then this was an order block here on H1. And you can see there, if I used it, you will see that there is a pullback. You can see that it reacted from that. Are you seeing that?
Yes. Can you yeah, yes. Okay.
Now you're understanding why
So
I call it an order block, because uh, an order block is where most of the orders are happening from.
so but now this was from the initial order block down here where
Mm,
the red arrow ends.
mm,
That one was a bearish trend, isn't it?
yeah.
So now price reacted there, and then we began to buy,
Yes, yes. Then we
and
had
then
a pullback.
we had a pullback,
Yes.
and that's
And
one two big candles there.
yeah, you add another, you add a green candle there, then the last candle. You can see there are many last candles there. There are two. There's a smallest, then the one that came back and retested that candle that I've drawn my block from.
Yes, and then it
Then
went back up
yes,
into the buying.
into the buying. So you
So
use,
it's that red candle, that small red candle is the order block.
yeah, you may use that. You may use that. All these are points of interest.
Oh, okay,
You understand? So we
yeah.
just draw them to wait for what will happen in future. Will they be of influence? If price will price react from them or not? That's the reason why we draw them, because we know that if we have them, many orders will be taken from that level. Many
Okay,
orders, because that's what market does.
okay.
Okay.
Wow, that's a new one.
So you
That's
need
a
to
new
know
one.
that there is things, and that's why I was telling you, if these guys miss the class, then they will have issues. They will have issues because most of the times, if you don't attend a class, it's hard to ask questions when you're watching a video.
Mm.
Yeah. So, I remind me what we were talking about.
We
Okay, I had finished showing you the rising waves there, and I was showing you the reason this price reacted, and I showed you it was a fair value gap here.
mm,
This was a fair value gap where this price reacted from, and immediately it went up. Now, why is this fair value gap important? It is very important because we know that market has to come and mitigate or balance. A price has to come and balance the market because it was untapped. This was price that was not tapped by any sellers. So
mm,
sellers came to balance it, and immediately after balancing it, look at that move.
mm,
There's nothing like even a retracement. Retracement happened like a day after or 2 days after. You can see where it happened from, and it happened from again on the fair value gap. I hope you're seeing the trend, how these things move.
mm,
You're seeing how they move. That was a fair value gap that price came and touched. Look at that. Touched it, immediately went again above. Are you
mm.
understanding that? Now,
Yes.
if I can delete this now, why and how do we normally determine a fair value gap that will be very important? And we normally use what we call Fibonacci. You know Fibonacci, I know.
No, I don't.
You don't know Fibonacci? It's a
No.
tool. It's a tool we use to look for retracement. So it's normally called Fibonacci retracement. So me,
Fibonacci.
yeah, it's called Fibonacci.
Mm,
I don't know if I. Okay, let me show you the name. That's the name. Are you seeing it? Fib retracement.
Okay. Yeah. Okay.
Yeah, fib retracement. So on fib retracement, we have many levels. Now, for the default levels, there are many, but me, I customized mine and I left only three levels: 100%, 50%, and 0%. Why?
Mm.
The fib shows you where price is going to retrace from. Most of the times, 50% and 61.8, they are the proper or valid retracement levels where price will retrace from. But see,
Now, let's go a bit slow there, coach. Yeah, I'm trying to understand the relationship
mm,
between this fib retracement
mm,
and the fair value gap.
now, yes, the fair value gap, I'm trying to show you the retracement.
Mm,
How when you draw, of course, Fibonacci, we draw it from the our low point or our lower low to our higher high. Are you understanding?
mhm,
Yes, that's how we draw our Fibonacci. So from our lower low to our higher high, we are looking for the level of retracement where possible, where possibly we will see our retracement happen from. So from this level, this was our high. After this candle was created, we could actually draw our fib. So once the high is confirmed after this candle closed, the second candle there closed, the high was
mm.
confirmed. So you draw your fib like that. Then the zero, anything that is above here, we normally call it premium, the premium zone. And then the one down below, the 50%, is the demand zone, or call it the discount zone. It's the discount zone. Now, the discount zone, you just like how we all know the market, you always go to the market looking for something that is discounted, something that is having low price. You understand that?
Mhm.
So, price for you to buy at any point of time, if you are going to enter from buy when price has reached the support level, like how it reached the support level and it bounced, you can
Mm.
never enter in between here. It's very risky. What we do is we wait for it to make a high and then you draw your Fibonacci, then you draw your fair value gaps, and then after drawing your Fibonacci, you anticipate which fair value gap is in the discount or is below 50%. Are you understanding that?
I am, but you are a little bit too fast, coach. You're a little bit too
Okay.
fast because
Let
these
me leave this.
terminologies.
Let me leave this session. We will talk about this session when we are in strategies. When I'm teaching you guys how to enter some of these trades. So
Oh,
let's
it
move.
was getting interesting though, but too many new terms and
I know, I know.
confusing technical.
It is very technical. I may lose you. I may lose you there. So let's look for the falling wedge now. I think.
Okay, it was getting very interesting though.
Yeah. So yeah, when it gets interesting, and you start to see how you're about to make money.
Mm, wow. So okay.
Aha, my power has gone, and my internet is going to go off for a bit, then it will come back.